We're due for a bout of volatility now. What could cause that? A variety of things. Coming up, we've got the United Auto Workers strike tonight, midnight. Another government shutdown, right? Coming up in October. And of course, lastly, the student loan repayments start October the 1st as well. Here's what you need to know before the bell. Volatility remains exceptionally low. In fact, as over the last couple of days, despite CPI news and all this, volatility has actually dropped back to the lowest level that we've had this year and remains extremely compressed here. We're getting on a pretty deep sell signal on a MACD basis. So again, just like a stock volatility index, we can look at the same way. It is getting fairly suppressed here in terms of the volatility range that it trades in, pretty oversold at this point. And what that suggests is that we're due for a bout of volatility now. What could cause that? A variety of things. Coming up, we've got the United Auto Workers strike tonight, midnight. If there's not a deal reached, the United Auto Workers will go on strike tonight. That could impact quarter four in terms of the economy because, again, you can almost bet that used car prices are going to go up overnight if they go on strike. So, there's going to be an impact potentially for quarter four, also an impact to the economy. If that starts to reduce earnings estimates, well, that's going to start to feed into lower stock prices, higher volatility. What else do we have coming up right around the corner? Another government shutdown, right? Coming up in October, going to be facing another government shutdown. So again, that's another impact that could impact quarter four economic growth, make it weaker than it is. And of course, also the fact that, when you start to look at what earnings estimates are, which are we've had a very big jump in earnings estimates for the fourth quarter. If those start getting ratcheted down, all of a sudden markets have to start reevaluating the prices being paid for those forward earnings. And of course, lastly, the student loan repayments start October the 1st as well. So again, there's another 10 to 12 to 15, depending on how you calculate it, $1 billion a month coming out of retail sales to go back to student loan payments. That could also impact quarter four economic growth and earnings. So again, pay attention to what's happening here with volatility. We've had a very suppressed level of volatility here. Wouldn't be surprised at some point here that we do get something that causes a pop in volatility. Could bring down stock prices a little bit more. But again, as we move into the end of the year, October, November, December, we're also going to be facing this kind of catch up by portfolio managers. So again, the way forward is not clear by any stretch of the imagination, but I think it's important to pay attention to volatility at these levels because historically, when you have such depressed volatility, you're going to wind up with a period of higher volatility. That doesn't necessarily mean this month, next month, December. It could be January, February, March of next year. These things can take a while, but again, this deep suppression volatility is certainly something worth paying attention to. That's what you need to know before the bell this morning.